And then there's the Fed. They met today. They started meeting today. Every meeting now is a two-day meeting. And we want to know what's going to happen tomorrow. So we're talking now the true state of the economy and where does the stock market go from here. Joining me now, Danielle DiMartino Booth and Jim Frischling. Welcome to the show. Danielle, I'll start with you. The Fed's meeting, everyone's hoping that somehow Janet Yellen will come out tomorrow, find a way to articulate that she's not wedded to this notion of 4 rate hikes. What's the true state of the economy, and can the Fed do that?
Well, I think Janet's going to try and give you a lot of happy nuance tomorrow. She can't be too forthright in what she says, because then she'd be admitting that December was the monumental policy error that we all think that it's becoming.
What about that, though, Danielle? Well, so what? At some point, if it is a gargantuan mistake, isn't it okay to say we kind of messed up a little bit? They can, I mean, is that, you work at the Fed, is that something you have to sign? Is that like...
As a former insider, I don't recall too many forthright mea culpas.
Okay.
Maybe I'm wrong, but when I was there, it certainly wasn't the way things were done. But, you know, you have to look back at manufacturing and what it's done, not for 1, not for 2, but now Morgan Stanley's predicting a 3rd consecutive month of additional contraction. And you have to wonder why in the 100-year history of the Fed, they first decided to hike rates when the factory sector was contracting. But
someone would say the job market is fantastic.
Some would. I would say that of the 485,000 jobs that were created in the household survey in December, 16,000. 3% went to people between the ages of 25 and 55. I would call the rest of it fairly low-paying part-time work. You have to understand the quality of the labor data that's been coming out in recent months.
I think the job market, this is the new normal. And the fact that there has been a lot of job creation, wages are not going up as much as we would like them to, but they are going up. I don't think the Fed's going to back off their position, by the way. And the fact that you talked about J&J, you talked about Procter & Gamble, the consumer's looking pretty good right now. I was putting a lot of weight on can the consumer carry this, because we are truly a consumer-driven economy, and it looks like they have. And guess what? These companies seem to actually have some pricing power. Maybe this deflationary environment we're talking about, P&G showed they have pricing power.
But volumes went down and they made it up on pricing power. And you know what? People will pay extra for Tide because they know Tide, and maybe they can. Nevertheless, though, is that the kind of conditions that would warrant the Fed hiking rates? I mean, don't we need to have more, the lack of inflation, the lack of wage growth, you know, the lack of real jobs, to your point.
And look what's happening in the global economy.
Right.
And to say nothing of, one of the banks put out a fascinating chart this morning that showed that the Fed has never hiked into a time when companies have started to reduce the debt on their balance sheets. Normally, you're hiking into companies increasing the amount of debt they carry. But right now, that cycle's already turned over, and yet the Fed is hiking. It's a big mystery to me.
Jim, so where does the market go from here?
Look, I was encouraged by today's action, and actually I take more positives from Apple, and I think the market may find some footing. I think we're going to be whipsawed still by oil and energy prices, but the fact is 40+% margins at Apple. That's impressive. And China, you know what? Plus 14% of buying their products.
So you're taking positives from the most amazing quarter in corporate world history.
I'm taking some positives.
All right, guys. Thanks a lot.